It's a very detailed number crunch question that I'm about to go through with you. It tests all of what you've actually done within the donations tax section from a number crunch perspective, just about everything. Just for number crunch questions, let's just go through a little bit of a format before I ask you to actually try to do this question. It says, see the detailed example solution below for a proposed layout. So what I'd like to do is just let me go through this question and I'll show you the structure that you should use. So what you should do is you should have the date of the donation, some details, so sold, donated a car or donation to wife or something like that, the amount of the donation, the amount of the exemption, the reason. So if you're donating to your wife, you can say donations to spouses are exempt. A net amount, what would that be? The amount of the donation less the exemption. And donations tax payable, it's either times by 20% or times by 25% when you do something. So that's what I think you should do when you structure one of these questions out. Next thing, it says it should be noted the donation should be calculated in date order, as 100,000 annual exemption is applied to the first applicable donation after 1 March of a particular year. So donations tax runs from 1 March all the way through to the last day of February. So you get a new 100,000 each year. So whenever you get back to March, the 100,000 is reinstated. If you don't use it, tough, you don't get to carry it forward. Okay. The other things is, if there's more than one donation made on the same day, the donor can choose the order of the donations for that day itself. The question will normally be explicit with that. It says, in addition, the 100,000 exemption is restored on 1 March of each year. So here's teaching example 10b. What I'd like you to do is I'd like you to try to do this example. It should take you round about half an hour to 40 minutes to do. Once you've done this example, come back to this video and we'll go through the example. It should actually determine whether you understand all of the number crunching for donations or not. Please don't look at the solution. I assume that you've actually done the example now, so I'm going to start going through it with you. It says Harry Inzamande is a 72-year-old South African resident that is a life assurance broker. He was born in the United Kingdom and moved to South Africa in 1970. One of the donations tax exemptions says that anything that you donate, okay, that is a foreign asset that you acquired prior to becoming an SA resident for the first time is exempt. So that's relevant. We'll see it in the question. And then became an SA resident. Because he's an SA resident, he has to pay donations tax. He returned to the United Kingdom for 5 years in the 1980s before returning to South Africa permanently. He won 30 million in the national lottery on 1 September 2020. He was already a rich man who's been diagnosed with terminal lung cancer, and he decided to donate money before he died. Prior to this decision, he had never made any donation before and had never paid any donations tax. So full 30 million rands worth of donations at 20%. Says his wife died on 6 October 20x0. So his wife died at that date. They were married in community of property. So up till 6 October 20x0, it will be half his donation, half hers for all joint assets. And they owned all assets jointly other than a Sunbeam car, which was left to Harry by his mother and excluded from the joint estate. So this asset won't be split because his mother specifically said it can't be split. It says Harry remarried out of community of property on 17 April 20x1. The following is relevant. Assume that the 100,000 annual exemption has been used unless otherwise stated. Okay. So first things first, 3 September 2020. Has his wife died yet? No, she died on 6 October. So he's married in community of property. He donated 60,000 to his daughter Esmeralda. Made no other donations this year. The fact that it's been donated to his daughter Esmeralda, it's a joint asset because they were married in community, so half of it will be taxable. So as we can see, 3 September, Esmeralda, 30,000 donation, 30,000 is exempt because he's got a new He's got an annual exemption of 100,000. So he's now used 30 of it. Net amount 0 equals 30 minus 30 is 0. Donations tax payable is 0. Next one, 7 September. Still married in community of property. He donated a Sunbeam car with a cost of 160 to his brother Charles. The car had a trade-in value of 90,000 and could be sold by a motor dealer for 115. So first things first, do we split this asset in two? No, because what does the question say? The question says it was left to Harry by his mother and it's excluded from the joint estate. She said, it's not for your wife, it's just for you. Okay. This car cost 160, not relevant. We always do things on market value. Which market value do we use, the 90 or the 115? I suppose it means you've got to look to see who Harry is. He's an insurance broker, not a motor dealer. So what one would be relevant for him? The 90,000 rand. Okay, and he donated it to his brother, 90,000 rand. Are there any exemptions for his brother? Not specifically. However, there is still part of the general exemption left. So let's have a look. 7 September, Charles, 90,000. We've used 30. There's still 70 left of the annual exemption. Okay. Net amount, 90 minus 70 is 20,000 times 20%. Gives you donations tax payable of 4,000 rand. Carrying on. To celebrate winning the lottery through a party for his friends, he spent 60,000 throwing a party for his friends. Now, you've got to look to the definition of a donation. It says it's a gratuitous disposal of property. Having a party is not like giving a donation. Giving a donation is gratuitously disposing of property to one of your friends. Having your friends over for a party is not a gratuitous disposal of property. Therefore, what's going to happen? You still need to write something down. It's very, very important because you've got to show the examiner that you understand. So you can say there's a party there. You're going to say giving a party is not a donation. There's no intention to make a gratuitous disposal of property with genuine disinterested benevolence. Okay? Because there's no donation, there's going to be no donations tax that is going to be payable. Moving on. It says he gave his personal assistant Rose 5,000 rand to say thanks for organizing such a successful party. So this is her job. The bonus is a donation, but within the exemptions, it says that if someone is going to include it into their income, then it is exempt from donations tax. So looking at the solution, I did give a donation of 5,000 to Rose. I had no need to give it to her. Okay. How much is exempt? 5,000. Why? Because it's included in gross income, paragraph C of the gross income definition. No net amount of a donation, no donations tax payable. Moving on. Okay. It says he sold his house in Mshlanga to his mother for 800,000. The house was worth 1.8. So section 58 of the Act says that where you sell something not at fair value, there is a deemed donation. What is the deemed donation? The difference between the market value of 1.8 million and the 800,000. So there will be $1 million of a donation. It says his mother paid 600 and the remaining 200,000 was left owing by an interest-free loan. You should deal with both issues in the question. The fact that there's an interest-free loan, is that a problem? No. SARS practice for donations is that the interest-free loans are not subject to donations tax. Okay, it said he made no other donations this year before this donation. It's on 1 March, as you can see. What happens with 1 March? Okay, with 1 March, it's a new year, he gets his 100,000 rand back, the annual exemption. So let's have a look at the solution. Deemed donation, 1 million rand. Why 1 million? 1.8 million minus the 800,000. How much is exempt? 100,000. It's 1st of March. He gets his 100,000 general exemption back. 900,000 taxable, 180,000. We should also write down something about the loan that's given interest-free to the mother. Simply, an interest-free loan is not treated as a donation. So there is no donation for an interest-free loan. So you should write something down. If you don't write something down inside a solution, you cannot get a mark for it. Moving on. His mother owned 100% of Federal Brokers, Pty Limited. Harold did not work for the company. Federal Brokers paid $50,000 in university fees for his best friend Gerald's son to study engineering. Gerald had no obligation to work for the company and none of the relatives employed by the company. This is also not considered to be a bona fide bursary. This was done at Harry's request, and Harry wrote off $50,000 of the loan owing by his mother. So what's basically happened here is Harry has gotten someone else to make a donation instead of him. Now, Section 57 of the Act says that where you get a company to make a donation, okay, instead of you, the donation is taxed in your hands. So this 50,000 Rand that was paid to Gerald by the company, this is deemed to be Harold's donation. So, bursary to best friend's son, there's no obligation for him to work. It is a gratuitous disposal, and it's done with genuine benevolence because there's no obligation to work back. So there's 50,000, okay? It's deemed to be made by Harry because he got a company to make a donation on his behalf. There's donations of 50 and net donations tax of 10,000 that is going to have to be paid. Moving on. It says in additional, Federal Brokers also bought Harry's son Lem a flat to stay in that cost 400,000. The flat was transferred into Lem's name on this date. This has been treated as a dividend of the company as was given to a connected person of Harry. So the mother, Harry is the mother's son, that Lem is her grandson. This gets treated as a donation. So this is a gratuitous disposal, but what has happened? This has been treated as a dividend by the company. And because it is a dividend by the company itself and not a donation, once it's a dividend, there is no donations tax that gets paid. You can only get levied and have tax on one item. So having a look here, 400,000 is the amount of the donation. 400,000 exempt. Why? Because it's been treated as a dividend. No donations tax will be payable in this instance itself. Moving on. It says he was tendering for a large part of Cosatu's business in his assurance brokerage, Federal Brokers Pty Limited. Cosatu would not do business with him other than provide the company with a 40% owned black BEE partner. He found a BEE partner and sold him shares in the business. Prior to this transaction, he owned 100% of the shares and the company was worth 4 million. He sold 40% of the shares in the company for 10,000 Rand to a BEE partner. So the shares, 40% of the company is worth 1.6 million. He sold it for 10,000 Rand. Is that a donation? The question you've got to ask yourself is whether this was done with pure liberality or genuine disinterested benevolence. It's not done for that. It's done because he wanted to get a big contract and earn more money from it. So even though this is a gratuitous disposal of property, it's not done with genuine disinterested benevolence. Because of that, it cannot be a donation subject to donations tax. And you'll see that there is no donations for the BEE transaction itself. He donated a house with a fair value of 750 to his illegitimate daughter Leah. She refused this donation and told him to shove the house where the sun don't shine. So one of the requirements for a donation is that it needs to be accepted by the donee. In this case, there's no acceptance by the donee, so this is not going to be treated as a donation. So there you can see with Leah, there's actually no donation. She didn't accept it, it's not treated as a donation. Carrying on. It says he gave a business associate 220,000 provided he employed his grandson for 2 years in a business to teach him how to run a music label, which was his grandson's passion. This 220,000 that he's given, he's getting value for. His grandson is going to be taught. This is not something that's done with pure liberality or genuine disinterested benevolence, giving the 220,000 Rand. Okay? There isn't, so as far as this, let's just deal with that first. There's no donation there. Okay? It's not a donation. Okay? Question is, has he given something to his son? It's not property that he's given to, okay, his grandson. Therefore, there's no donation on the services that are being rendered to his grandson. There's 12 June now. It says Harry owned a mare, female horse called Bluebell. His wife rode Bluebell every day, and his granddaughter was allowed to ride Bluebell on the weekends. Bluebell was pregnant, and he promised his granddaughter that she could have the baby foal if it was a filly, young female horse, when it was born. So, we don't know whether it's going to be a female horse. We don't even know whether the filly is going to survive. So at this point, it's the donation of a hope. It's not worth anything. So there's no donation at this point in time. When the filly is born, there might be something different then. On 27 June, it says Harry owned 100 shares, 100% of the share capital in Mutual Assure Pty Limited, a private company that was worth 3 million. The company issued 500,000 shares to his son Lester at a cost of 200 Rand. Now, you need to understand, this is what we call a value shifting arrangement. It is dealt with under capital gains tax, but there's no transaction with Harry here. It's between the company and Lester. So even though Lester is actually getting shares much, much cheaper, okay, this is not a transaction that involves Harry, and it is not a donation. Therefore, if you have a look at the solution, there is no donation. Okay, but as you can see there in the solution, there may be a little bit of capital gains tax itself. Moving on. It says he gave his wife a diamond tennis bracelet that he bought for 400,000 Rand as a present. So this is any donation to your wife. What happens with that? It's exempt. 400,000 in, 400,000 out. Donation to spouse is exempt. Going on. It says he donated one of two commercial farms to the EFF, a registered political party. The farm was worth 3 million. The farm had a land bank value of 2.2. It's a commercial farm. There's special rules for commercial farms. When you donate them, you only value them at 70% of market value. Which market value are we going to use? The actual market value, the 3 million, not the land bank value. So 3 million times 70% is 2.1 million. So how much is the donation? 2.1 million. The EFF is a political party. Political parties are considered to be public benefit organizations, just like UNISA or any government university would be. And it's exempt. So the 2.1, no donations tax payable. Carrying on. On his second commercial farm, he allowed his son to make use of the grazing fields to graze his cattle for 3 months. He normally could have earned grazing fees of 30,000. Any non-usufructory right given to your children with farmland is exempt from donations tax. So what's going to happen here? 30 in, 30 out. Moving on. He had a small farm with a market value of 400,000 in Mildredgest that was not being operated commercially. What's going to happen with this? It's not a commercial farm, so the 70% won't apply. A famous restaurant and sporting adventure center was next door, and he rented space in the restaurant and sporting center for parking and for a very long zipline slide. He sold the farm to his Indian cousin Prashant for 100,000. So 400 is what the market value is. Sold it for 100. 300,000 is the deemed donation in terms of section 58. What's going to happen with this? We don't times by 70%. Why? Because this is not a commercial farm. So there it is, non-commercial farm, 300,000. No exemption, and there's going to be donations tax payable at 20% on it. Moving on. He purchased a rare stamp from his son John for 750. A rare collector and a stamp shop offered his son 200 for the stamp, which they believe to be the fair market value of the stamp. So he's overpaid by 550,000 Rand. So by overpaying by 550,000 Rand, he has made a donation to his son of 550,000 Rand. There's no exemption. He's going to have to pay donations tax on it. Carrying on. He donated 23,000 to an alcoholic friend on condition his friend did not drink. He cancelled the donation 7 months later. This is a donation. How much is it for? It's going to be for 23,000. If we cancel within 6 months, it's exempt. However, this was cancelled 7 months down the line, so there's no exemption there. 23 less 0 gives you 23,000. Times 20% gives you 4,600 rands in donations tax that needs to be paid. He bought shares in a UK company before he immigrated to South Africa. So any asset he owned prior to coming to South Africa will be exempt if he donates it to someone else. It says the shares originally cost 10,000 Rand and were worth 410 when he gave them to his nephew. So, because he owned it prior to becoming resident for the first time, all 410,000 Rand is exempt. Okay, 0, 0. Next one. It says he returned to the UK in the 1980s to work there for 6 years and took up his UK citizenship again. During this time, he bought shares on the French stock exchange. He gave these shares, now worth 27,000 Rand, to his daughter. Now, he's already been an SA resident there. So, because he's already been an SA resident, it's not exempt. Because the rule says that if you bought it prior to becoming a resident for the first time, then it's exempt. So this 27,000 will be subject to donations tax. Moving on. It says he inherited shares in a Canadian company from his uncle who died in Canada and was a Canadian resident at the time of death. So what's going to happen with this? His uncle's a Canadian resident. If you inherit foreign assets from a non-resident and then you donate those assets, it's exempt. So it's a foreign asset, shares, from a Canadian resident, from a non-resident. So if he donates this, it's exempt. It says he donated these shares when they were worth 56,000 Rand to his nephew. So 56 in, 56 out, no donations tax payable. Carrying on. Says he inherited shares in an SA company from his uncle who died in Canada, tick, from a non-resident, and was a Canadian resident at the time of death. He donated these shares when they were worth 60 to his nephew. Now it's an SA company shares. The exemption only applies if it is a foreign asset, not a local asset. This is a local asset. Therefore, even though inherited from a non-resident, because it's a local asset, he does not get the exemption. So the 60 will go in, and none of it will be exempt. Pay tax on the full 60 times 20%, 12,000 rands payable. Carrying on. It says his Dutch aunt gave him a dirty magazine collection worth 60,000 for his 50th birthday. He in turn gave this collection to his son for his birthday. It was now worth 100. Harold had brought the magazines to South Africa. So he did get it from a non-resident, but the assets are now located in South Africa. So this 100,000 rands worth of magazines is not exempt. Why? Because it's a South African asset at this point in time. So 100 less 0 exemption. You need both non-resident and it needs to be a foreign asset. 100 times 20%, 20,000 donations tax that will be payable. Moving on. In addition, his Dutch aunt gave him Dutch shares as a 55th birthday present. He also gave these shares to his son as a birthday present. These shares were worth 63,000 Rand. So what's going to happen with these 63,000 Rands worth of shares? It's Dutch shares, so it's a foreign asset. It's inherited from it's donated by a non-resident, so it's from a non-resident. Because both of those things are there, it's going to be exempt and no donations tax is going to be payable. Next one. It says he got French shares from his uncle, a French resident, as an inheritance. He sold the shares and invested the proceeds in a French bank account. He gave this money to his son when the French account was valued at 30,000 Rand. So you can sell that foreign asset that you inherit, okay? And as long as that asset stays offshore and is a foreign asset, you can still donate it and it can still be exempt. So because he sold it and kept the proceeds offshore and gives the proceeds away, it is exempt. So inherited from a non-resident and money from that inheritance is still offshore, you can donate it and it will be exempt. Next. It says he got Spanish shares from his uncle, a French resident, as an inheritance. He sold the shares and invested the proceeds in an SA bank account. He gave this money to his son when the account was 37. It's in an SA bank account, even though it's from a non-resident, because it's a local asset, SA asset, you can't get the exemption. So you'll pay donations tax on the full 37,000 Rand. Next. Says he decided to work for a charity for free for the first 2 weeks of December. Had he charged for his services, he would have billed them 72,000 Rand. So what's going to end up happening? When you donate services, it's not subject to donations tax, therefore, services to charity, not a donation. Why? Because it's not property as defined. Moving on. It says his work was not completed at the end of the 2 weeks. He agreed with the charity that they would pay him 20,000 to complete the work. Once he had finished the work, he relented and told the charity not to pay him. So, what's happening here, guys? This 20 was owed to him. He has written off a loan, or he's written off an amount owing to him. When you write off an amount owing to you, it is subject to donations tax. I know it's a charity, but not all charities are registered as public benefit organizations. You can't assume it's a public benefit organization. That is why there is no exemption there. Carrying on. It says he promised the granddaughter the first foal of a champion race mare. The foal was born on 25 December and it was worth 75,000. Okay. This champion race mare has now given birth. The 75,000 is now being donated to his granddaughter. 75,000 is the donation. No exemption for it. Moving on, he donated 40,000 to COSATU, a trade union improved in terms of Section 30B of the Income Tax Act. Something's approved in terms of Section 30B of the Income Tax Act, public benefit organization. Any donation to a public benefit organization is going to be exempt. So, no donation tax payable. He donated 100,000 to a trust. Donations into a trust attract donations tax. Donations out of a trust are not subject to donations tax. Because this is into a trust, it will attract donations tax. 100,000, no exemption. 100 donation times 20%, 20,000 donations tax payable. Next one. It says Harry was a lifelong admirer of Billy Joel and paid a music promoter 50,000 to organize him a backstage pass to meet him at a concert. This is not a gratuitous disposal of property. He's getting something for it. There's no pure liberality. He is getting to meet Billy Joel. This is not a donation. Therefore, as you can see, the 50,000 to the promoter, no donation. There's no donation, there's no need for an exemption itself. It says Harry's wife had caught him cheating with a prostitute in December 20X1 and they had separated. A judicial order of separation had been obtained by his wife in January. Harry had felt so guilty about cheating on his wife that he gave her a 900,000 Rand Porsche for her 48th birthday. So what happens with the Porsche? She's no longer his wife. There's a judicial order of separation. Because there's a judicial order of separation, the spousal exemption falls away. 900,000 less 0 gives you 900,000 as a donation. Says he gave his nephew 60,000 on condition he did not take drugs. He was arrested 3 days later on charges of using drugs and the donation was cancelled. If you cancel a donation within 6 months, it's exempt. So 60,000 in, 60,000 exempt. Donation was cancelled within 6 months. Says he gave his son 15,000 Rand a month to pay for varsity education, residence and food. This was not considered excessive. This is maintenance of his son. He's paying for his son to go to varsity. If something's maintenance, it is exempt from donations tax. So the 180,000 that he gives, it's maintenance, so it's exempt from donations tax. No donations tax is payable. Moving on. He gave a patent he developed worth 210,000 to XXX Pty Limited, a company owned 80%. Now, this is a bit of a trick. So what it says inside the Act is that donations within the same group of companies are exempt from donations tax, and the defined same group of companies is 70% or more. Even though he owns more than 70% or more of this company, he's not a company. This is not within the same group of companies. So this 210,000 will be subject to donations tax. Okay. It's now in a new year because this is on the 5th of March of the next year. It's finished this year. So because he's in a new tax year, he gets a new 100,000 annual exemption. Carrying on. Says his grandson was in urgent need of open heart surgery to correct a birth abnormality, and his daughter and her husband could not afford to pay for the operation. He gave them 300,000 for the operation. Operation cost 303. So this is maintenance once again. Okay, paying for an operation for one of your grandchildren. Therefore, no donations tax on it. So there it is. 300 in, 300 out, no donations tax payable. Okay, carrying on. It says Harry was divorced from his wife on 14 April. In terms of their registered anti-nuptial contract, he had to give 2 million because the reason of their divorce was cheating. So 2 million for registered anti-nuptial contract and another 500,000 for a duly registered post-nuptial contract. Both of these are exempt. Whenever there's an anti-nuptial or a post-nuptial contract, it's exempt from donations tax. It says Harry and his wife have been married subject to accrual. Harry paid 8.7 million to his ex-wife as this was her share of the marriage accrual. This is subject to the law of matrimonial property. This is not a donation. It's an order. It is not treated as a donation, so there's no donation for that in terms of a divorce settlement. Moving on. 5 years ago, the company he worked for gave him 10,000 shares in the company at a cost of 2 Rand on condition the shares could not be sold for 5 years, and on condition he did not compete with the company over those 5 years. 2 years ago, when the shares were worth 300, he gave these rights to his daughter. Now, again, this is just like the horse. This is a hope. As long as he doesn't compete for 2 years and carries on working for the company for 2 years, this might be worth something sometime. So there's no value when he gave it to her. It says here the 5-year period has just ended and his daughter sold the shares for 630 on the first possible day she was able to sell the shares. So the donation happens, actually there's value to the donation on 17 May, and that 630,000 Rand is going to be a donation on that date. Now, and there's 126,000 Rand donations tax that needs to be paid on it. Carrying on. And then it says 4 years ago signed a donation contract giving his donator a share in his company when he died. The value of the shares was 2 million then. It is now worth 4 million. He took up a slot card, Destruction Derby Racing. He told his friend that if he died racing, his friend could have his second-hand Toyota Yaris worth 40,000. He died racing. There are two things here, the company and also the Yaris. Now, both of these, okay, the only reason people are getting this is because he died. They're both subject to estate duty. Donations, mortis cars, or donations that only come into existence on the death of a taxpayer are both exempt for donations tax purposes, and no donations tax is going to be payable on them. So this is a very, very good example to just go through. Bear this one in mind when you're preparing for an exam, because by going through this example, you'll be going through much of the syllabus by actually going through it. So if you had to keep a little bit of a list of what it is that you need to go through at the end of the year, this would be a good example to summarize everything for donations tax.